hanging out this Principal Willie.
All right. Morning, everybody. Let's get going here. All right. Friday's session was a bit of an interesting one. You can see, obviously, we started out in the session trading up, pushing out maybe sideways, slightly up a bit in the beginning of the U.S. session. And then it was about that point where we had news that a Russian convoy in Ukraine was attacked by the Ukraine military, and there were some casualties there, and so we had a huge spike in volatility there. We obviously saw the markets really sell off quite hard. I mean, the S&P and the Nasdaq were up nicely at that point. They really reversed down pretty hard. The S&P fell almost 1% at a point on the back of that. But I think because it was maybe one separate little incident, and there was nothing that really kind of came out after that to kind of further to heighten the intensity of that, then the market kind of settled in and managed to drift back a little bit higher toward the end of the session. And I think this morning's open with with most markets opening higher this morning, the S&Ps up nicely in the pre-market and that sort of thing. It's probably just a little bit of relief on the back of what happened on Friday. So we'll have to see if there's any more of that violence that can contribute potentially to some volatility going forward this week. We had a few data pieces this week, actually a little bit more mixed on the U.S. side, with Empire Manufacturing and consumer confidence coming in a bit softer. We also had retail sales, I think, were a little bit softer earlier in the week. And so, first week in a while that the data points in the States started looking a little bit more mixed. I think a bit of a miss in the jobless claims as well. So definitely a little bit more mixed there. Earnings have still been pretty solid, but for the most part here, we've been watching, global central banks start to lower expectations outside of the U.S. of recent. All right, we saw a little bit of mixed action out of Asia this morning, with the Hang Seng down. Shanghai up, Kospi down, Aussie up, and the Nikkei more or less flat. We did see new home sales numbers out of China that fell almost 1% from June. We also saw, it was interesting as well, saw some existing home sales numbers there as well, if I'm not mistaken, and they were actually really soft, and really doesn't make any sense to me that we saw the new home sales and the existing home sales numbers so soft, but then we saw the second biggest property company there, Vanke, which saw moderate gains after it released earnings today, basically showing reasonable profits there, a little bit better than expectations maybe, but it just surprises me that they're able to do that with the home sales numbers the way they are. So, potentially, with these Chinese companies, not 100% sure if you can always believe what they're putting out there. So maybe just take it with a pinch of salt. And you can see in Australia as well, we had a little bit of leadership out of some of the resource stocks, maybe having a bit of a dead cat bounce after Friday's sell-off, but no real nothing to really drive markets one way or another in Asia overnight. All right, interesting chart here from Ryan Dietrich at See It Market, and it shows the longest consecutive months on the S&P 500 without a 10% pullback. And you can see there, the longest streak ever was at 84 months. That was from 1990 to 1997. So that was basically a 7-year streak. Then we had the 03 to 07 period, which was 4.5 years. That was recent. Obviously, we had 62 to 66, quite a long time ago, 84 to 87, and then we're fifth on the list as we speak right now. So we're at 34 months and counting, 2.8 years without a 10% pullback. So we are starting to get, you're talking about this is historical, this is going all the way back, and we're at the fifth longest streak without a 10% pullback. So I think we are starting to get a little bit long in the tooth. We know that we're starting to get deeper into the business cycle now as well. It's just something, a little food for thought with that chart there. All right, a couple stocks going to ex-div today. We've got British American Tobacco, we've got Siboney, and we've got Mondi. Keep those in mind. Don't get caught on those in the open, especially Siboney. Divvy will be significant for the size of the share. We've got the okay, so this BTI number I think is supposed to be in pence. So just make note of that. I think that works out to call it 8 Rand 53. So yeah, that is wrong. Okay, so a big divvy coming out BTI today as well. All right, very light on the data front today. We've got Rightmove house prices out the UK overnight, a little bit soft, and we've got trade balance out of the Eurozone at 11, and we've got housing market index numbers in the States. So nothing to pay attention to from that point of view. And let's get into the maps. All right. First thing we're going to have a look at is Standard Bank. Standard, you can see here, is dropping some sort of a level of support. There's definitely a little bit of support here around 141. You can see there. We topped out there, bottom there. So definitely some sort of level there, and I think you can also say at 140 there's a little bit of, with some of these wicks hitting down around 140. So somewhere between 140 and 141, there's definitely some sort of, there was some sort of support. Support has now become resistance, and Standard Bank, and really those earnings. I mean, there's just no other way to put it. I mean, they weren't great. I mean, I know people can talk about once-offs and the whole story, but they just weren't great earnings. If you look at, let's go all the way back. We're going to go all the way back to a 10-year chart here to have a little bit of a more clearly defined look. 120, obviously the major level. The other one, the other real level of support here at 130. So just watch that closely. I really think that we're going to probably get down at some point. Maybe take a couple months, but I think there's a very good chance that we come all the way down and test 130 again in Standard Bank. All right, Naspers today. Yesterday on Friday really underperformed quite badly relative to Tencent. You can see it came down here into support again at around 1350 odd. What's interesting is this morning we've got Tencent, which is really under pressure. Again, we're down 2% as we speak in Tencent. So obviously going to get a lower open here out of Naspers, and we're going to be dropping this major support level here. So this is going to be key. There is some more support down here around all the way down here around 12, I think 80 if I'm not mistaken. So call it 1275, and this is definitely looking a little bit ominous to drop at what is a major level here at around 1355. Obviously, we can't regain that. We'll probably need to at least come down to this 1275 level to test in order to be able to turn back to the upside. All right, if we look at Anglo Gold, came down on Friday to test this 180 level again. You can see how massive that 180 level is. We wicked down. We basically touched it right on the nose at 180 and reversed up off of that. A little bit of that reverse, I think, at the end of the session came on the back of when things happened and. With the Ukraine and Russian conflict. But watch this 180 level today. I think it might come back in play again today. If it doesn't hold, then I think we probably could have as much as 20 Rand a downside here out of Anglo Gold. If we do hold, then we could potentially look to break up out of this little consolidation and push higher. Right. The next one here, one we haven't shown in forever, is Growth Point, and you can see how hard it's rallied over the last 4 or 5 sessions, and it's done so very quietly. And to be totally honest, I just noticed it this morning. There's a major level here at 25, as you can see. I'll zoom it forward a little bit. But bottom line is we are breaking out under any measure that you look at here, and I think still a reasonably higher target out of this breakout. I mean, we've had 6 or 7 days in a row of real hard consecutive runs, so it might be a little bit long in the tooth. A pullback back to about the 25 level would be nice for a real punch up to probably 26.50 if we do get a pull back down to 25. All right, and the last one I'm going to show today is Discovery. And Discovery, we're looking at the 2-year here again. In fact, I'm going to even back it out to a 5-year just so we can see the big picture here a little bit more clearly. After running its butt off for a couple years here, you can see that that 100 level absolutely critical. I'm going to zoom it forward, and what we're going to have a look at is, this thing has basically popped up, I think above what is resistance, but hasn't been able to make the breakout. And we've, the last 2 days we've kind of been up there. It really needs to break out through 100. Friday we tested 100 again. It failed. It came all the way back to 98.59, which is really right on support, if I'm not mistaken. This level's about 98.50, I believe. And if we don't punch up soon, then we'll probably end up starting to reverse back down, finding some support a little bit lower. So we'll watch this one closely again. If it does punch through 100, this thing's going to run hard, most likely. And that's it for today, guys. Thanks a lot.